So, first of all, before I let you guys introduce yourself, for you who do not know, these people have been, well, the real drivers behind NOAH. Jan, Yoram, and I, we are just trying to do the execution. So if you look at us as a startup, these are our shareholders, because each of them has contributed a huge amount to the success of NOAH. And without those people on those shares, you guys wouldn't sit there and I wouldn't stand here. So thank you very much. Scott, maybe you start telling us a few sentences about yourself, what your firm is doing in Europe.
Great. Thanks, Marco. Good to be here. I'm Scott Collins. I'm with Summit Partners. Summit is a growth equity firm founded in 1984. We have offices in 4 cities around the world. We manage about 15 billion in capital. We have a European fund of 1 billion euros, and we invest in high growth companies in many different sectors, including the internet. I manage our European business, and I've been living here in London for the last 11 years.
Thank you.
All right, thanks, Marco. I'm John Meeks. I'm one of 2 partners in the European office for TA Associates. We look very, very similar to Summit Partners in terms of the number and size of deals that we do. We've invested about $1 billion in European internet in the last 6 or 7 years. Some companies you might know is eDreams, which I think now is about 4 billion euros of sales online, and the largest online travel agency. AVG Technologies, which is a publicly listed company. M&M Direct, Fotolia, led by Oleg Tscheltzoff on the side there. Big Point, and eCircle. So we've done a number of investments in the internet, and we're very happy to be here.
My name is Zita Saurel. I work for Hellmann and Friedman. Look a little different to Summit and TA. We've got about $20 billion under management, and our current fund is a $9 billion fund, which we invest across the US and Europe. Also a real focus on growing companies. We do look at companies a little bit later in their stage of life, and so we're looking at companies that usually are 20 plus EBIT size. We tend to try to put $200 million to work at a minimum. So again, we're trying to support companies to continue to grow a little bit later in their life. And we've done a lot in TMT across the years. We've been around for about 25 years. We've touched sort of all the different areas, and we've been investing in digital for probably about 10 years now. I'm based in London. We've got offices in San Francisco, London, and New York. And I've been here for about 10 years now.
Yeah, good afternoon. So, Philipp, Freise. Sorry, I don't have one of these sexy white microphones. We were a bit too slow, Oleg and I. Usually we tend to be faster than John, but on this one we were slower, yeah? It's, KKR is an $80 billion private equity firm. You all might know that we are run by our founders, Henry Kravis and George Roberts. Still, the business was founded in 1976, so it's a bit like the granddaddy of the industry. In fact, they bootstrapped the industry when it didn't exist. And I think that's very indicative of what our fund believes in. We're very entrepreneurial. We're investing around the world. We have a $16 billion US fund, $6.5 billion European fund, and now a $6 billion Asian fund, so really global. I run the media and technology segment in Europe. In terms of what we have done in that segment, the best example is to my left, and to my right, actually. We teamed up with John and with Oleg to invest 300 million both in debt, 150 and 150 million in equity into Fotolia. So we are now partners and really want to make it to a several billion-dollar company. Other than that, we have invested in GoDaddy, which is the leading web hoster in the US. And I'm sure all of you have Sonos products. We actually own Sonos, which is a Silicon Valley-based digital equipment provider. Maybe as a last point, because it's very interesting to some of you, we actually own Channel 7 in Australia, which is with Channel 7's Yahoo 7 business, the largest internet player in Australia. We've linked a few of you to this company in Australia. And lastly, you all know that we own ProSiebenSat.1. We talk a lot about it tomorrow when we have Thomas Ebeling join us on the Future of TV panel. ProSieben really has launched a big digital business, giving you the opportunity for media for revenues or media for equity type transactions to reach your viewers or consumers effectively at affordable prices. And it's really become a core business of ProSieben, and he's become a big evangelist of digital. So, you know, we are proud partner of him in that business.
Yeah, hello. So I'm Oleg Tscheltzoff, the co-founder and CEO of Fotolia. Fotolia, which was created in 2004, is a marketplace for stock photography where anybody can come and buy and license stock photography from prices starting at $1. I'm also now starting to be known as the client. It means the first client of Marco when he started his boutique investment bank. And thanks to him, in fact, I'm working now with Philipp, with this amazing gentleman who is Philipp and John Meeks. Also, and I guess this is the reason why I'm on this panel, I'm a quite prolific angel investor, and up to date I did like 50 plus investments in various companies, internet companies.
So in terms of internet, these are one of the best investors Europe has to offer. And what I think is very interesting, if we start with Oleg, setting up companies, being an entrepreneur, and then switching on the other side and becoming an investor. And we heard a lot today about how people pick their investment opportunities. Tell me how you pick it. How important is the team, technology, idea? You told me a few days ago that actually was a bit surprised that most of your angel investments actually ended up to be successful. I would say, from my side, and lots of people I know, normally it's the other way around. You're kind of overly optimistic. What did you do right?
I don't know. I guess I was lucky, or I don't know, or maybe I had good intuition. But it's true that this year was very, very successful year for me, and I had like 8 exits just in 2012 out of 50 companies. So it's like 20% sold, totally exited. I mean, this year, and 4 other companies who did very, very big rounds. So how to choose the business? It's hard to say, but I was very, very successful. I look at my exits, and in fact, this year, out of the 8 companies, I had 5 copycats. And so just to name them, there was Lustre in the UK, who was a copycat of Fab.com, and who was acquired by Fab.com like a couple of months after being created. I was an angel investor in Jolibox, who was in France, who was a copycat of Birchbox in the US, and who was acquired by Birchbox, also like less than a year after creation. I was an angel investor in VinoBest, who was a copycat of Lot 18 in the US, and who was acquired by Lot 18 also. And Dilisim, which was a copycat of Living Social and also acquired by Living Social. So
you're not German or something like that. The Germans like the copycatting.
No, but I have also other companies who exited, but it's quite remarkable to see that 80%, you know, of my exits or 70% are copycats. But copycats, I mean, in France, UK, or Germany. I mean, I wouldn't recommend to invest in smaller markets because Europe, I mean, in fact, is 80% of Europe is, I mean, on the internet is UK, Germany, and France. So copycats is a good thing. Then, of course, you need to look at the team. And I like to choose teams when there is more than one founder because it's so hard, I mean, to create a company. And some people have really the passion and the drive. And sometimes you need to pivot a little bit. So, you know.
Okay. Thank you very much. What we are very interested in is structural stuff. And we see more and more late-stage private equity firms looking at internet and putting big amounts. And I don't know if you saw this in Informelio magazine. You have in there a nice article with some nice examples. John mentioned Odigio, Permira deal, obviously KKR did Fotolia, Hellmann, Friedman did several internet deals. Zita, what is exciting for you about the internet? Why are suddenly the big private equity, the kind of $10 billion plus, waking up? And what are you looking for? And sorry to ask so many questions at the same time. When you look at growth, does it matter, or at some stage when it's like 20% plus, you ignore it? And are you willing to pay up and compete with the strategics? 3 questions, sorry.
Okay, so let me. Hopefully, I can remember them. If I get lost along the way, I count on you to bring me back to the path. So, first question: what do I find exciting about the internet? What do we find exciting about the internet? Well, I think there are a lot of things that have been mentioned in this room today. growth is, first and foremost, particularly as we sit in Europe and the US, that's growth challenge. So, companies that are growing, there's a secular reason for that growth. That's exciting, and that's a great way to create equity value. So we like that. I think a lot of the disruption as well that comes with what you guys are doing in this room is really exciting. Different business models, new ways to make money, ways to sort of have a penetration game, if you will, as you're taking away from older parts of the economy. So those are the two probably most interesting things. And the third, I'd say almost secondary, is that a lot of internet business models have really high returns on capital as well, right? You don't have much CapEx requirements, you generate great cash flow, you can invest that to continue to grow. So those are sort of three things that make the internet generally really attractive.
How much time you spend on the internet versus other non-internet activities?
Yeah, well, so I mean, there's sort of two ways of answering that, Marco. Specifically on internet companies, I'd say maybe 25% of my time, but the internet touches everything that we do today. And when I'm looking at a software deal or an information services deal, which is where I spend a lot of time as well, you've got to have a point of view on how the internet and mobile and all these things affect those companies as well, and how they're going to address either touching their customers or sourcing technology. So probably spend much more than 25% of my time thinking about it more generally for investing.
Thank you.
So, I don't know if you want me to address the part two
the
of your
valuation question.
Well, part two of your question was about why big PE firms now are interested.
Sure.
Okay. Pretty simple answer. The internet's grown up a lot, right? Much bigger companies, some real established leaders now, and those are some of the things that we look for in the later stage buyout firms.
Do you like to put debt on the transactions you do in the internet?
I think it depends, and I think this is a very company-specific question. You don't want to put debt that's going to jeopardize the development of a business. It needs to be appropriate, whether that's internet, financial services, whatever you look at. So yes, we do if it makes sense. We're really cautious about it, and there are other ways of creating equity value, as you guys all know.
So, as you know, we have a big focus at NOAH on the financial side of the world, and around 30% of the attendees of the 1,400 registered have a financial investment background, and you'll find on our internet site or the PDFs the kind of venture capital, growth capital, and buyout providers. And Summit NTA, you are doing this for a long time. Summit NTA have a huge background, and I remember when Scott came to Europe and built Summit Europe from scratch. I mean, tell us a little bit, what has changed investing for you? The venture capital funds got bigger. They're kind of competing from the kind of coming up phase, and the buyouts are looking more and more at opportunities in the internet. Has it become more competitive?
I think it's probably become more competitive over time. I don't think a huge amount has changed, Marco. When we came to Europe, it was 2001. There were a lot of fine investment firms already operating here, and some others have come. I think our approach has been to really focus on generally entrepreneurial owned, founder-managed, profitable companies, and our idea was to come here and try to build relationships with the best entrepreneurs we could find, whether it was in the internet side or other parts of technology, and then deepen, develop those relationships. And I think that's still what we're doing, and other people are here, and we're just trying to do our fair share of deals in the market, and we have some good competitors, and sometimes we work together, and sometimes we work against each other. I think there's plenty of opportunity for good investments in this market. And there's no shortage of nice companies out there for us to invest in. So we're certainly not. It's not easy. It's tough, and you've got to certainly pay for good companies. But I think nothing fundamentally has really changed.
If I would ask you to the round, every pitch to you always requires a pitch from you to the entrepreneur. And if I'm the entrepreneur, I mean, what is the one thing you tell them, and then you get this? Maybe, Oleg, you start. When you are asked to put some money, how do you sell yourself?
Well, of course, the first argument for me is that I was an entrepreneur myself, which is not the case of many investors. So I know, especially early stage, you know, all what it takes to create a company from scratch, and from all the businesses I created before Fotolia was also in web hosting. I always myself tried to go international, because I'm coming from France, I mean, which is a big market, I mean, good market, but sometimes for certain services like Fotolia is not big enough, so you need immediately to go international, and this is what I'm trying to teach, you know, to the companies who are investing.
You know how it is to be in the shoes of the entrepreneur, and you're helping on scaling the business. Philipp, what did you tell Oleg? Or I could ask Oleg now why he's selected you as one of the investors, and I know there was a lot of demand. Can you tell about this?
Depends what time of day it was, but I will not disclose that, yeah? But no, seriously, I think it's what KKR will tell you in answering that question. Today, it's not about capital, because you will find capital. Whether, you know, for you, it's a combination of angel investors, it's venture capital, ultimately an IPO. What really is important is not capital. What is important is entrepreneurial capital. And I think that's really what we stand for. And, you know, Oleg, you should talk for yourself, but I think that's what you were attracted to think about when you have a company that has, you know, real good momentum, 25% growth, number one market positions in certain European countries, but that really has the potential to be a global market leader. It might be beneficial to have a partner that has a global scale. We have 80 companies around the world. We have many broadcasters. We have technology companies. We also own many of the retailers in the US, where there's many synergies that you can lever. And, you know, we have started doing this for Fotolia. And importantly, coming back to Oleg's point, the key is acceleration, you know. We don't have much time to lose in this environment. I think, you know, 5 years ago, you would have been told all of the main niches and segments will be taken by US players. I think we have seen with City deal, where Oli has done a fantastic job, you know, really making that the core of Groupon, that, you know, with the right execution, Europe has a role to play in building global market leaders. But what you need for that is not only capital, it's basically operating resources, global scale, and synergies with something that you can link on very quickly. And I think that's what KKR can offer you, and that's what we are doing with Fotolia.
Zita.
Okay, I get to go after my frenemy over here. This is what we call each other. As Scott was saying, we all, you know, we work together, we compete against each other. You know, at the end of the day, Philipp said it very well. We are capital, and that doesn't mean, you know, we're not different in that respect. We also have a very similar approach to life, and so it will come down to, you know, the relationship that you can build with us. Do we have a partnership? Do we share your vision of the business? And I think where we were maybe a little bit different at Hellmann and Friedman is that we like to try to think that we can help you do what's best for the business long term. Yeah, so we're very patient investors. We have a 5+ year time horizon. We have lots of capital that we can help deploy for add-on acquisitions or whatever else you might need. And we're not driven the way a public market investor might be by quarterly results. We're willing to go through, you know, a period of investment, maybe depressing earnings for a while, to then come out the other side. So this is, I think, one of the features that we bring to our companies, along with, you know, having seen a lot of other companies. I think that helps. We bring a network, we bring expertise, we've sat on other boards, we've seen people make mistakes, have great successes. We can bring all that to bear when we partner with you.
By the way, I'd like to give you a little tip. When you speak to investors, the question should not be how much you value my business, what are the terms I'm getting. The question I think should be asked first is, how long do you need to decide? And these two gentlemen at the kind of right side there, on the left side from you, they're really fast deciders. But that's just my personal view. John, tell us.
Well, I think it's interesting because a lot of times if you're selling your business or if you're in a negotiation, you do want to make sure that the person on the other side of the table has the authority to get the deal done. And I think what's happened is firms have gotten bigger, there's investment committees and investment committee processes, and a lot of people don't know whether or not the person who they're dealing with can get a deal done. And I think, you know, if Scott's running a deal, the chances are he's got authority to get it done, and vice versa with me. I think, you know, we try and be very decisive, and there are lots of opportunities out there, and we only want to invest in the companies that have real opportunities to grow a lot. And I do think the point of it being a partnership.
How do you get to the right person, by the way?
Is right.
How do you get to the right person?
Some firms have separated underwriting from sales. And so
Yes.
the guy who you're meeting with,
Because I'm sure the audience, there are a lot of people in there who receive, I mean, I'm as a banker, I go, yeah, but then Summit, TA, Inside, you name them, they just called me. And then you find out, oh, this guy is 3 weeks out of university and is probably the best salesperson I've ever met. And sure enough, no, he's a partner. So
it's hard.
How do you bridge from getting the call from one of your smart, super salesy people to, yeah, you guys?
Well, you can tell when there's lots of senior attention and when the investors are committed.
So you basically know what's going on in your organizations, and then you step in. Scott, how do you differentiate from TA?
Don't answer that, Scott.
It's kind of a mean question, but you're kind of the last one to ask. So,
Listen, TA Associates and all the firms here and most of the firms in this market are great and will never sell negative. I think a lot of it depends on the personal commitment of the team involved and the firm involved on that particular deal. A lot of it depends on the commitment of the individuals at the investment firm. Our view is that entrepreneurs make great businesses. We're in a funny business, largely of investing in companies that don't need the money, and so we need to make the case that we're going to be great business partners and help them do better with their businesses, with our support than they might be able to do without our support and without our capital. We're used to being minority shareholders. Most of our deals are for minority shareholders, and we don't slow down decision making. And I think you were right to say that Summit and TA are pretty fast at making decisions. There are the other thing I was going to say in this business now, and we're basically all salespeople. I mean, we got to get out and hustle and meet with companies. So, even though we're running offices, we're spending 85-90% of our time on the road, meeting with companies, our portfolio companies, working with perhaps new investment prospects. So we're not hard to reach. We're not hard to get to at all.
Okay, so thank you. That was great. And one thing I learned, you're clearly very friendly, and that's a great thing because that makes life nice. And when I met Oleg after the bankruptcy of Lehman Brothers, and he had a strategic bidder, I asked him, have you thought about the financial guys? And that's an entrepreneur who probably had as much to do with financial investors at that stage, like me with, whatever, retail or energy businesses. And he kind of warmed up to the idea, and he got to know them, actually pretty much all of the people on stage. So as an entrepreneur, you self-funded your business, you didn't bring in venture capital, you built a business which became profitable, I guess after like 4 years, and then you decided to take some money off the table through a growth capital deal. And yeah, you met John, and you took him into your baby, you made some cash, but you were for the next journey. So the stuff we heard, and by the way, Philipp invested recently this year, the stuff you heard on stage now, is it true? Are you happy?
Well, is it true? Of course not. No, I joke. I mean, but nobody is naive. I mean, when you want to do a deal, of course, you ask what counts. I mean, of course, what counts is you need to have a good offer. So, I mean, money talks here. I mean, especially when you're at such level, So it's very, very important. I mean, that the deal is probably, among the best deal. I mean, and then the promises, I mean, are important too. But you don't rely only on this. So, and of course, the human relationship. I mean, because you're going to work long term, with the people. So the reason, I chose John and during the first deal, and also Philipp, secondly is. Because there were other bidders who were bidding more or less at the same level, and it ended up, like everything, a one-to-one, talk and going out to drinks and everything. And if you can make it, I mean, as a human relation, because you're going to work with people.
So I think that's a great lesson learned. If you contemplate to stay with the business, you don't want to be really, really nasty to your new investor and shareholder. You want to make sure you have a nice relationship going forward.
I think that's very important. Is of course so that's why it's not only sitting in a meeting room and and looking at numbers and charts. I think you need to spend time, and just go out for a few dinners, drinks and talk about other things than business. And in that sense, I think that John was a really, really good investor, because a few times, he just came, he took the plane and he came to visit me and he said, no, today we don't speak about business, and we just had dinners, we're sitting because we knew that it will be, a long story. So this helps. I mean, it's valuable. I mean. Yeah.
So you are happy. Let me ask Philipp, are you happy of having invested in Fotolia?
It's a fantastic company. All my expectations have been exceeded already in the first 6 months. First of all, what you're talking about is a really strong partnership. I think to be with John and with Oleg is a real privilege. Not only does the company grow faster than we thought, is more profitable than we thought, and the people in it are more passionate than we thought for the business.
We are back to passion, by the way.
Yeah, it's very
also
important.
Passion in the buyout stage.
It's hugely important that you have an entrepreneur who's driving the business with enormous passion. In fact, I remember a conversation I had with my founder once, I'm not saying which of the two, where he sat me down and he said, Philipp, people keep coming into my office and they say, why are you still working, being worth $8 billion? And he said, I just don't understand the question. It's my life. It's my company. It's my passion. And that's really a privilege to be with Oleg, because he feels the same way. And I think we're going to build an amazing business together over the next 5 years or so. And it's really, really great. So I'm very happy to answer your question.
Scott, we talked about competition. And I know that you guys, like many others, have looked at the emerging markets. And is one way to find more interesting investment opportunities in less crowded environments like London or Berlin is just flying a little bit longer and get these bloody visa and the passports and going to Russia, Turkey, and wherever?
Well, I mean, we think the emerging markets are an interesting opportunity. It's in the private equity or venture capital business, which is very, labor-intensive business. It's not as easy to access those places. We've opened an office in Mumbai, and we're optimistic about investment opportunities there in the internet and other places. We backed the Samwer brothers back in the early part of the 2000s, 2003, in one of their early businesses, and developed a strong relationship with them. And more recently,
was that Jamba, a company called Jamba?
Jamba was the company. Yeah, we backed them, and more recently we've partnered with them and Schinnebeck and JP Morgan and some others in making investments in e-commerce businesses in emerging markets, which we think is a great
and
investment
opportunity. And are these copycats businesses or?
Yes.
I don't. E-commerce is copying. Who's copying who? I think e-commerce is e-commerce. It's selling things on the internet, and I'm not sure who started that one, but that's not a. We think there's a lot of opportunity in there. It's a. I don't think anyone holds the the intellectual property to e-commerce, and so these businesses are out there trying to dominate some very interesting markets. So it's competitive, but we think there's some strong opportunity. Southeast Asia, Russia, Brazil, places like that. There's some very interesting opportunity.
How do you see the exit markets, John? When you buy a company, do you worry about the exit? The entrepreneur doesn't. Does the person who invests into the company think about exit?
Yeah, I think we worry more and more about the exit as you do larger and larger deals. If you're in venture capital and your valuation is 10 million, 20 million, the sky is sort of the limit. But when you're investing, as most of the people here are, in companies that are worth a few $100 million or euros at the time, you have to be worried about the exit. And some of the exits have been to U.S. players. Some KKR, we did a partial exit. We still love the company, but we think it's good to have a partner. In life, it's good to have a partner, and we don't always try and max the exit. And we used to do that through IPOs, and now selling partial stakes, I think, can be a good exit. And we've sold a lot to private equity recently. This is internet and beyond. And the IPO markets are very, very dead in Europe. And so one of the things we do look for are companies that are successful on an international basis. It's one of the things that was interesting about eDreams, about Fotolia, about Big Point, about the companies Scott's mentioned.
So being neutral to one geography, basically, so you're not dependent on the IPO exit market in one
It
country.
gives you an ability to scale. And so what we're doing in Europe across consumer brands like Zadig and Voltaire, Cath Kidston, medical tech devices, is we're looking for international businesses because they can grow longer and they're more attractive on exits and sales. And so for those of you that are building your business, I think they're much more valuable if you can prove success outside of the home market.
So who of you have been in Russia 2012? Well, I think Oleg maybe, because you have a Russian background. Have you been there for business?
Yeah, sure. I mean, Fotolia has presence in Russia, but it's a little bit more complicated market. So in fact, we're opening a subsidiary there because, you know, with payment systems and people like to pay locally, and not everybody has Visa cards. So we need to adapt a little bit the way we sell, you know, to a market like Russia. Okay. And a part of that, I'm also investor in a fund called Runa Capital, who is specialized on the Russian market and especially on technology, like software and technology.
I'm asking the question about Russia because for the ones who have not read the program, the next panel is about investing in Russia. And maybe I managed to get Philipp to answer short. Have you been to Russia this year?
You could be a TV presenter. You're leading in the next program. It's very smooth, yeah?
It's another career, which is
great.
less pressureful.
Yes, I have been. 2 weeks ago, I was in Moscow. I'm a YGL, so the YGLs meet in different places. And we had a really interesting weekend talking about Russia's development and technology and what's all happening there. And, you know, it's an interesting market.
Zita.
I haven't personally been to Russia recently, but it's certainly, as everybody's saying, I mean, it's a big market, done incredibly well in the internet space, and I think one to watch, certainly one that has and will continue to have opportunities.
Well, I'm excited to hear the panel. I always talk about early mover disadvantage, but now it seems to be the right mover disadvantage for Russia. John.
We've made 2 investments in China, 4 or 5 in India, 1 in Southeast Asia. We have not done Russia yet. Not sure if it's a big enough market.
By the way, John is the latest of the panel moving to Europe, so he has to get used to the risk profile in Russia. But eventually, he will probably move there.
Don't worry, Oleg and I will organize a trip for him.
Scott.
Da, Marco, I've been to Russia, and we've invested in La Moda, which is, we think, the fastest growing online fashion business in Russia right now.
Fantastic. Guys, thank you very much for answering my curious questions. Thank you.
Thanks.